The stockings were hung by the chimney with care in hopes that the last market update for Southern California would soon be there. And here we are to share what happened in 2023, plus what to expect for levels of 2024 inventory. And stick around to the end for the latest poll our viewers did vote for the topics we'll cover next year. You'll want to take a note. Hey there, Christian Walsh, real estate agent with Wire Associates and part-time elf. We've been helping buyers and sellers make the best actual and factual decisions in this crazy housing market. So if you're ready to dive into the single family, multifamily numbers, plus Altos Research Reports, hit that like button and let's get started. Look, it's the holidays. I get it. You got sugar plums to eat and cookies to bake and gifts to wrap and stockings to stuff and all that. So let's go through the data as fast as we can, give you an idea of how things are wrapping up for the year of 2023. It's been a heck of a ride, that's for sure. Starting with Orange County, looking at the single family data, going through quickly so we can see we got 2018 and 2019 more normal years. Got our big old hump in the middle of 2020 and 2021. Then our big dip, 2022, 2023. How do we look year over year? So for Orange County, we can see that we have a slight dip in the number of properties going under contract at this time. So it's 673 in the first 2 weeks of December last year. This year, 649. Well, that drop year over year in demand, a little surprising, but maybe not that surprising when we have 100 fewer listings that came to the market. There are fewer homes out there if you're shopping in Orange County to put under contract, so that could help explain why we're down year over year. We're going to show you in the Altos Research Reports data what to expect for inventory, but here's a sneak peek. When you have listings down this far in Orange County, what do you think is going to happen when we get into January? We're going to share with you what we think in a bit. Moving into LA, every single county is going to have the same thing. 2 regular years, 2 big old years, and then 2 low years. It'll be interesting once we start to put in 2024 data to see how that looks as compared to these past years. But here is a place where we have an increase in the number of properties going under contract. Now, part of what we have in December is interest rates have dropped from their highs. They're not anywhere near their record lows. We all know that, but they are certainly down, and that's encouraging people to get out and write offers. So we can also see that we have fewer new listings in LA year over year, and that is an interesting trend to see. So sellers don't seem to be convinced that it's a good time to sell with interest rates having dropped. It's still going to take a little bit of time maybe to convince them to come to the market, because we're seeing so far in OC and LA that new listings are down. Riverside, we can see we have a slight uptick in new listings. So people in Riverside are convinced it's time to sell, and buyers are out there buying. So we have over 100 more homes under contract at this time period in 2023 than we had in 2022. So interesting to see that year over year increase in Riverside. San Bernardino, also an increase year over year, slight increase in number of properties going under contract, decrease in number of new listings. So interesting to see these levels, half of what we had literally. So 2018, there were literally twice as many homes listed in the first 2 weeks of 2018 in December than there were in 2023 in December. That is a crazy drop in the number of new listings. Ventura, always all over the place, but still has the same trend. Too normal, too crazy, too low years. We can see that we are down year over year for new listings and properties going under contract. Not surprising. Ventura marching yet again to its own drummer, doing its thing. San Diego, one market that was continued to be hot, just like Orange County. We've seen values continue to go up. We are down slightly for the number of properties going under contract, and we are down for the number of new listings. So similar to Orange County, down in those numbers, not dramatic. We seem to have hit that floor for demand. It'll be interesting to see what happens as we get into 2024. Of course, subscribe to our free weekly email newsletter so you'll get these market updates gently delivered to your email inbox every Sunday. Taking a quick look at Southern California multifamily, one of the only places you'll get these numbers, we can see that in Orange County, new listings are definitely up year over year, over double new listings. Pending sales up slightly year over year, above 2018 levels for pending sales, but definitely below other years. Moving into LA, we can see the listings are pretty flat as compared to last year. Slight uptick in the number of pending sales. Big difference in LA this year versus last year at this time is the eviction moratorium is over now. It was still in place last year. At this point in time, it looked like it maybe was coming to an end, but then it was extended. Riverside multifamily, crazy back in 2021 at this time of year, but other than that, more normal year. Inventory has been pretty constant, no real changes there. Number of pending sales are down, and we've talked about why theoretically pending sales would drop for multifamily, and that is it is tougher for a property to cash flow once you factor in the cost of the mortgage, once you factor in the debt service. A lot more is going to debt service than we had in these years. A lot of these investors who bought in these years, if you are in a property that's 5 units or more, it's going to be adjustable rate financing. So the folks who bought back here may have a 5, 7, 10-year adjustable rate mortgage and will have low rates. Everything looks good. But once they get to a time when rates aren't as low, it could be interesting for them when it adjusts. There isn't a cap in commercial financing for that first adjustment. So it could get interesting for those folks. Looking at San Bernardino, time of year where snow might start to come. It's not snowing too crazy. Had crazy storms last year. That's part of what led to the 1031 exchange change. We can see that the pending sales are up. Listings are slightly below it, but these aren't crazy, outrageous numbers, but that is a slight twist. So demand is stronger in San Bernardino than Riverside. They're kind of sister markets where cap rates are very similar, affordable markets. Ventura, always all over the place. Let's see what's going on. One under contract right now, just like last year, down from 2019, and not much going on for new listings. Just it's Ventura. Moving into San Diego, listings were trending down, went up, nowhere near the peak. But you can see we've been seeing things slowing in San Diego for multifamily, but they've picked up. That we're close between number of new listings and properties going under contract. And the reason we know that new listings were way down, we see the number of sold properties are way down. So there weren't that many properties going under contract in San Diego. Now they're under contract, and theoretically, maybe some folks trying to close before the end of the year for tax purposes. And they decided they're going to spend it in San Diego. Quick run to the Altos Research Reports, specifically looking at what we should expect going into 2024 from an inventory level. It's helpful to look at these reports. We're going to start at the national level. A lot more data here. You can look over my shoulder, or you could subscribe for these and they'll be sent to you. But inventory at the national level, we can see is trending down. That's not unexpected, but what I want you to notice, and you'll see it very strongly in certain counties in Southern California, normally the trend for inventory starts in the summer where it continues to go down. That didn't happen in this year. We didn't start to see a trend down nationally until November. Some other counties matched that. So things were looking very different. The market wasn't behaving like it should. Now, we can also see the same thing happened last year where it was a late turn in inventory, but these are atypical years that we've had the past 2 years for inventory. Tougher to read them, and definitely have had more consistent going up, but that's turned. State of California, we can see inventory, and again, see how late that turn was. It wasn't until November, and what's ironic about that? Well, interest rates have been dropping, so while sellers have been saying, nope, not selling, inventory is dropping, interest rates have been dropping. So this is actually good for sellers. They should consider getting on the market. Statewide, we can see inventory is lower right now as compared to last year at this time. Not quite as low as it was in 2021 and 2022, but going into 2024 for the state of California, we can expect inventory to be similar to going into 2021. Orange County, where are we going on inventory? Pretty flat throughout the year. It was getting sucked up, just never got a lot of inventory. We can see that we are down, and really only one other year it was lower was this time in 2021, and that was the record low going into January of 2022. It looks like we're going to be at a low coming into 2024 for inventory in Orange County, just not that much hitting the market. Los Angeles, see that late turn? It was going up slightly and then turned in the middle of November. Down, not to the same as it was in 2021, but still pretty close. Less inventory than we've had at this point in time than any other time in history, other than that one right there in 2021. And we can see going into 2024, inventory will be low. Riverside, continual drop. That increase we see here back in 2022 was when interest rates started to go up the first time. And we've had interest rates like that since then. We can see that we had a turn in November, kind of a subtle turn in inventory, seems to be headed down. It's not too far off of where it was in 2020, definitely above 2021, but still a low inventory time in Riverside, San Bernardino. So we can see the inventory took its drop in late November, to late November. And now we're down, but we had less inventory in 2020 going into 2021 and in 2021 going into 22. So inventory is down, but not at the low levels that we've had. This isn't a record low for inventory for San Bernardino. So we'll have to see how it shakes out. Still, new versus absorbed, plenty of properties being absorbed, but it'll be interesting. And you can see days on market for the lowest quartile is actually longer than the two middle quartiles. So that's an interesting trend. Stuff at the lowest point taking longer to sell than the middle of the market in San Bernardino. Ventura. So despite what we see in the MLS numbers, it's still moving along in Ventura. And you can see, just like Orange County, pretty flat from an inventory level throughout the year. Then it shifted, and it is low. And it was lower in December of 2021 going into 2022, but that's it. Other than that, it's up close to those levels. So inventory is going to stay low. That's good in Ventura because demand is low. Fewer properties trade, like we always talk about, because there are fewer properties to trade. And finally, San Diego, low inventory throughout the year, very flat like Orange County was. Had that late drop and it's turning the other direction, going down now in the holidays. Not as low as it was in 2021 going into 2022, but lower than any other time. So again, another low inventory environment. As interest rates are continuing to drop, we could see demand continue to go up. We need more sellers, or what's going to end up happening is another overheated spring market. Thanks for sticking around to the end. We'll give you a quick run through on one of our latest polls, and that was, what real estate topics would you like us to cover in the new year? Put your answers below. It's interesting to see the breakdown. So Prop 19, 28%. We've released other content on that. We'll keep it coming. 1031 exchanges. I haven't actually done enough content on that, so I appreciate that. Luxury market, nobody seems to care. I'm still probably going to tell you about it. And remodeling is another one of the top two. So yeah, I'm going to add in more content. There's some other stuff I want to do to my house, plus other stuff that I'll share related to that in purchasing real estate. So looking forward to that. Got some other comments. Defaults, yes, definitely. I'll add in more on the mortgage defaults. Al Bundy, thanks for reaching out, Al. I will definitely cover all of these topics. And then Gigi, my daughter, would like me to cover her and soccer. And Carol seconds that. I appreciate that. And Maria, thanks. Predictions about the housing market. I probably released that, but man, it used to be relatively easy to come up with a nice general prediction about the real estate market, but it has gotten a lot tougher. I mean, who would have known rates were going to go up that fast, and now they're dropping, and maybe the Fed's going to decrease the Fed fund rate in 2024, and it's very tough to predict, but you know what? I'm up for it. I'll do it. If I'm wrong, I'm wrong. All right. Thanks so much for those who voted in the poll, and again, put your comments below on what topics you'd like us to cover in the new year. Thanks for all the support you've given me throughout the year. We have a whole lot more coming in 2024. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we can't wait to hear from you.